Good morning, guys. How are you all? I hope everyone is cool. Can you hear me? Let me know before starting this stream, and then we'll go for the price action. Good morning. Good morning. Good morning. I'm cool, man. Good morning. Thanks for saying. Thank you, Ram. Thank you. Thank you. Thank you. Sounds great. Thank you. Don't want to waste any time. Love to start from the beginning. Just let me check it. Okay, perfect. So this is the daily fair value gap. If you remember, from this sell side liquidity to that buy side liquidity, this is the range. From there to there, inside this range, that is the only fair value gap I have near about this 50% of that range. So I told yesterday, if the candle close below this fair value gap, I will start to look for this sell side liquidity. If it doesn't close below this fair value gap, I'll keep looking for that buy side liquidity. So from daily chart for Nasdaq, I'm still looking for the buy side liquidity. My intention to see that it will go for the buy side liquidity. So from the daily chart, my bias is bullish. After a big range day, if you ever see a big range day, most of the time market do the consolidation. That means it doesn't go toward the buy side liquidity or sell side liquidity after some kind of big range day. So this candle is actually some kind of weird candle near about 1,000-point move. I'm expecting this today's candle is gonna be inside this candle. So I'm not interested to see that this candle will go above that candle or this candle will go below that low. So here my interest to see that it will be in range bound. That means it's not moving too fast. It's not moving toward one direction. Instead, it will make both buy side and sell side. Then you will look for that buy side and sell side. Today is Tuesday, which is a manipulation day. So I'm expecting the manipulation is going to happen both side, both buy side and both sell side. That is my expectation from lower time frame, but from higher time frame, I'm only interested to think that market will go for that buy side liquidity. Until market is above this daily bullish gap, I'll keep looking for the buy side delivery. So in the daily chart, I'll look for the buy side liquidity. I would love to go to our 4-hour chart, as the hourly chart is little messy. As you can see, a lot of things over here. So I'm not interested to go to hourly chart or looking some kind of a specific fair value gap or something. Would love to start from the 4-hour chart. Now from 4-hour chart, you can see this is, anybody can tell me what is this gap? This is the gap. In my opinion, this is the inverse fair value gap, because after this gap, market came back again to this gap, went higher, take the liquidity. So in my opinion, this is the inverse gap from 4-hour chart. So far market came again until the 50% of that inverse gap. This is the 4-hour gap as well, which is entry gap in order to this leg. Why I'm using this leg? Because above this leg we have the new week opening gap. So there is a gap above this gap, above this candle. So if you look over here, from here to here, this is the last gap and this is the entry gap. I didn't mark the entry gap, but you can see it is trading this entry gap. So from this gap, it can start to fall for this sell side liquidity. From daily chart, I'm only interested to look for buy side delivery for that buy side liquidity. But from 4-hour chart, so far I'm looking for this sell side liquidity. I have both sell side liquidity and buy side liquidity. So here from 4-hour chart, market, until market doesn't go below this daily gap, I'm not interested to look for sell side liquidity. Until market doesn't come until this volume imbalance or the new week opening gap, I am not interested to look for the buy side liquidity. So when I'm in daily chart, from daily chart, it's easier for me to think about the buy side delivery. But from 4-hour chart, I'm indecisive. That I don't have any bias from the 4-hour chart. So all I'm seeing that, can this inverse gap hold the market and send it lower, at least below this daily gap, so that I can find the way that market is going for this sell side liquidity. I will look for that. But if it doesn't do that, instead if it started to go higher, I have no bullish PDRA over here, no bullish PDRA, nothing over here except that daily bullish gap, no bullish PDRA. I have a lot of bearish PDRA that can stop the market, send it for the sell side liquidity. I don't have any kind of bullish PDRA that will stop the price and send it for the buy side liquidity. Here I'm in indecisive. I have no interest to think that it is going to respect any of this area to go for that buy side liquidity, only except that daily bullish gap. So if it fall until the daily bullish gap, then I can start to think that maybe now market will start to go for that buy side liquidity. Otherwise, I have to stop over here. I have to think about the price action, not biased from 4-hour chart. Bearish biased, I have this inverse gap. So if it is violating this inverse gap, maybe it will go for that buy side liquidity, but until it is respecting this inverse gap, I'll keep looking for sell until this bullish gap from the daily chart. So this daily bullish gap, I'll look for the buy until this area. I came here for the 4-hour chart just to mark this inverse gap. So this inverse gap and also this bearish gap from 4-hour chart, this is all I'm looking for from the 4-hour chart, nothing else. Because the 1-hour chart is little messy, I have no way to mark anything from the 4-hour chart except the liquidity. So this buy side liquidity you'll see from the 1-hour chart, except that buy side liquidity I have nothing to mark from the hourly chart. I have to come to 4-hour chart just to mark this inverse gap. So except this inverse gap, I have nothing importance. I don't have any importance to this 4-hour gap except this inverse gap. I'll go back to 1-hour chart now. From 1-hour chart, you will see that there is no bearish liquidity, sell side liquidity, no sell side liquidity except that sell side liquidity. Or if you look this low and that low, they are the relatively equal lows, which is very near to this sell side liquidity. I didn't mark this sell side liquidity as this sell side liquidity is very near to that sell side liquidity. So I actually didn't mark it, but except this buy side liquidity, which is a shallow run, this high has taken over here by a shallow run, which is my buy side liquidity. I have this buy side liquidity over here, except that buy side liquidity, I don't have any sell side liquidity. Yeah, by that specific hour, that means 1 hour ago here, this candle has made some sell side liquidity here. This low and that low, didn't mark it as it is little messy over here, just didn't mark it. But I have this buy side liquidity from hourly chart, except this buy side liquidity, I have nothing from hourly chart. This gap is my only PDRA from my higher time frame. This daily gap is my only bullish PDRA. Except this bullish gap, I have nothing from the hourly chart. All of this area, nothing at all. So I will keep looking for, if market would love to fall, I will look for the fall until this bullish gap from the daily chart, and then I will start to look for the buy for that buy side liquidity. As I told, after that big range day, big range, it can be range bound. That means it will go for buy side liquidity and sell side liquidity. So here, this hourly chart, this is the only thing which is important to me. This is the 15-minute chart. As you can see, this is the new day opening gap over here. This is the consequent crossment of that new day opening gap. Until market is below this new day opening gap, I'll keep looking for sell. If I look for sell, this is that sell side liquidity. This low has taken over here by a shallow run. Again, this is the sell side liquidity. From here, which is from the hourly chart, the buy side liquidity is over here. Yesterday, when this high has taken over here by a shallow run, I told that this is my next target. So in the PM session, I was only interested to look for buy. I didn't care about the sell. I didn't care about any kind of fall. I would love to look for the buy, and I have already showed you the buy setup, only PM session setup, which was created after 3:30. That worked perfectly, but just stopped me out beforehand. Here, this is that only bullish fair value gap above this sell side liquidity. This is the only bullish fair value gap. If this bullish fair value gap from 15-minute chart is broken, I will start to look for this sell side liquidity. Remember, this is that daily bullish gap. So from 15-minute chart, it is possible that from 15-minute chart, it will take this sell side liquidity and then it will close over here. In hourly chart, you will, in daily chart, you will see that there is just a wick over here that has traded this bullish gap one more time. So you will see a bullish, wick over here through this bullish fair value gap from the daily chart. But from 15-minute chart, it can take that sell side liquidity, which is my sell side liquidity. I have both buy side liquidity over here. This is the buy side liquidity. This is the sell side liquidity. My first interest, until market is below this new day opening gap, I will keep looking for this sell side liquidity. But as I told, it doesn't need to take this sell side liquidity. It can maximum reach until this daily bullish gap top. So when it will be here, I'll be done. my trading is done, when it will be here. But I will look for that sell if and only if market close below this bullish gap, which is the only gap in the 15-minute chart, nothing else. Below this below this buy side liquidity, I have this last fair value gap. If this last fair value gap is broken, market will start to look for that buy side liquidity. If this fair value gap is broken, market will start to look for this sell side liquidity. Above this sell side liquidity, this is the only PDRA from many higher time frame that can stop the price to take that sell side liquidity and then start to go higher for that buy side liquidity. It is possible. If this bullish fair value gap from 15-minute chart is not broken and market close above this new day opening gap, I will start to look for that buy side liquidity and will think that this last fair value gap from 15-minute chart will be broken. I will try to take a partial when market will reach to this 50-minute last gap and then hold my trade maybe until the buy side liquidity. But as you know how to trade over there, but I'm talking about the direction. If I would love to look for the sell side delivery, I have to wait until this bullish fair value gap from 15-minute chart is broken. If I would love to look for a buy side delivery, then I will look for this new day opening gap to be broken. That means market will go through this new day opening gap after 9:30. Then I will start to look for that buy side liquidity. If it happens like this way, it come here, then it started to fall for this sell side liquidity. I will do nothing. When market is closed there above this new day opening gap, I will start every kind of move toward here. I will look for the buy side delivery. If I'm wrong, that means market doesn't want to go for that buy side liquidity. Maybe it has taken that high as a liquidity, react from this bearish gap from 15-minute chart, last gap from 15-minute chart came here, then started to fall. All of this fall, I will do nothing. I will do nothing. It will close below this new day opening gap. I'll start to look for sell, any kind of buy run. I will start to look for sell, any kind of buy run. And it will be best if the I want to look for buy run, I will look for sell run. I'm sorry. If it come here, take that liquidity, trade that last gap, came here again, any kind of buy run, I will look for sell delivery until this area. Then maybe this will happen. Like this way, it will work. If it doesn't like this way, little confusing, okay? I'm gonna repeat it one more time. Right now, market is over here. I have this buy side liquidity. I have this sell side liquidity. Until market is below this new day opening gap, I will look for sell side delivery. In the meantime, until this area, I will look for any kind of partial. All the sell will be valid if this 15-minute last gap is broken. So in my mind, I'm looking for sell, but the sell will start to happen when market will be below this 15-minute last gap. So it will be valid when market will be below this 15-minute last fair value gap. If it doesn't close below this 15-minute last gap, what else can happen? It will respect this gap. It will respect this gap. It will start to go higher. In whole run, I have nothing to do until market doesn't close here. When it will close here, I will start to look for buy. Immediately from there, no. Any kind of retracement, I will start to look for buy. How far? Until this buy side liquidity. I will try to look for an partial to that last fair value gap from 15-minute chart, and then I will hold my trade maybe until this buy side delivery. If market come here, okay, just for example, it come here. Until now, I am not doing anything, okay? There will be a very nice setup or something like that. I will have nothing to do. Then trade maybe here, come back again until this last fair value gap. Didn't go for this buy side liquidity, started to fall again. I have nothing to do. It closed there. Any kind of retracement to the upper side, I will start to look for sell again for this sell side liquidity. Until this area, I'll try to take some kind of partial over here, and then I'll keep looking for this type of sell side delivery. It can stop over here and then start to go higher again. In the meantime, you will take the partial and you will close your trade, whatever you will do, because this is a big range. So it's not a small range, it's a huge range. This is how I will keep looking for this market. Now, when market come here, maybe you are looking for buy and market will never go for this buy side liquidity. You are looking for buy here. You hold your trade until this area, or whatever you want to do, you can do that. So I am looking for buy here, then come here, closed there. Then I will start to look for buy by thinking that it is going to take this buy side liquidity. but market didn't take it. Come until this area, stopped here, started to fall. All of this run I will miss. Okay, I am not going to touch all of this run. I am looking for buy. It didn't provide me the buy. Instead of buying, it has provided me sell. I will miss all of this sell as well. Then I will start to look for sell again when market will close below this new opening gap. Then it will give me any kind of higher retracement. Any of this area, I will start to look for sell. For example, it didn't fall. Instead of that, it keep looking for buy. Okay, looking for that buy. I will miss every kind of buy here until market doesn't close above this new opening gap. This is how I will trade. But in the meantime, if you find any kind of opportunity to take entry, please go for it. Until it doesn't provide me that, I will not look for the buy or sell. It doesn't complete the run. Maybe it will start to fall here. Okay, for example, it started to fall and come until this area, closed below this 15-minute gap. What I will start to look for, sell, for this sell side liquidity. But actually what happened, it came here, take that liquidity, started to go higher again, which is a fake breakout, started to look for maybe for this buy side liquidity after taking that liquidity. So I'm not looking for sell, but you will see a beautiful sell setup over there. Maybe you want to take that sell, go for it. Don't force me to look for the sell. I will work with this higher time frame PDRA. In the meantime, if it doesn't provide me any entry opportunity, I will not take any entry. If it provide me entry opportunity, I'll go for the trade. If it doesn't work with my prediction, I will not touch this market. You will do your own trading. Don't just tell me, brother, it is now falling for this sell side liquidity, it is falling for that buy side liquidity. Because the thing I'm telling you, I'm very clear with that. For the last time, I'm going to repeat it one more time. Right now, market is here. Until market doesn't close below this 15-minute gap, I'm not looking for sell. If it closes below this 15-minute gap, I will start to look for sell. Market can start to go higher again from there. It is possible. I can be 100% wrong. But when market will close below this, I will start to look for sell. I don't care about that buy run. Again, when it will close above this new opening gap, I'll start to look for buy from there until this buy side liquidity try to take some partial over here. What happened? Market closed there, started to fall. I will miss everything. No, nothing to do over here for me. No sell is valid for me. Every single kind of retracement, I'll look for buy. Every kind of retracement, I'll look for buy for this buy side liquidity. I'm wrong. Market started to fall. All of this fall, I will do nothing. Nothing. It will come back again, closed below this 15-minute gap. I will start to look for sell again. All of this run, I'll just let them go. I am not going to touch it. I will work with this prediction. If you see or find any good opportunity to trade here, go for it. I have no problem with that. Just don't tell me I'm thinking that now market is going for that buy side liquidity. I'm thinking that now market is going for that sell side liquidity. Is that clear to you or not? Because I repeated it 3 times as it is little confusing, because sometimes market can be bullshit. If it works with my prediction, I'll go for the trade. If it doesn't work with my prediction, I will not touch it. Is it clear or not? Just let me know that. Let's follow old new week opening gap to do. Here is the old new week opening gap. I don't know. I didn't mark it. Maybe I'm just watching this area. Okay, the things I have marked here. This is the only important thing, because I was watching this market. I was seeing this market from the very beginning. So I really am not interested to mark anything else except this thing. Whatever I have marked over here. But my intention today is market will take both buy side and sell side liquidity. This is my whole intention. Any of them can be taken first. It can be happen like this way as well, or it can be happen like this way as well. I'm just interested to think about this buy side and sell side. I'm not interested to think that it will take this sell side liquidity and then it will keep falling for the next sell side liquidity. I'm not interested to think like that way. I'll look for this sell side and the buy side. Both of them I'll just look for. But any of them can be taken first. You have 7. Okay. Guys, is that clear to you or not? Okay, let me just know that, because I would love to look for, show you the yesterday's PM session entry only. The only entry I have seen. I'll just would love to show you that. Though I have shared it to our Discord in live when I got that entry. I will just explain why that was my only entry. Just make sure that it is all clear to you, because when I will start to trade and you will see that I'm missing all the trade, market is going towards some direction, you will start to talk that is a buy, that is a buy, that is, I don't like it. So I need to make sure that you all got the point I explained over here. If that happens, I'll go for the trade. If it doesn't happen, I'm not interested to look for any kind of trade. I really like the analysis you provide. Hey, Sorin, thank you so much. Okay, thank you. I guess, thank you, Khalid, for your understanding. I'd love to come here, actually, yesterday's PM session. So all of you remember that was the buy side liquidity from yesterday. Well, here, that high was my target around the PM session. I told that when market has made this obvious liquidity, this high has taken over here by a shallow run. I told that I'm not interested to look for any kind of sell anymore. I will look for buy only when I have seen this buy side liquidity. So yesterday's PM session, I was looking for buy. At the same time, I told that there was a last fair value gap and 15-minute last gap. So if market close below this 15-minute last gap and below the first presented gap, then maybe I will start to think about the sell. When market here came here below this 15-minute last gap and also the 1-minute first presented gap around this area, there was no selling opportunity. So still I had my belief that market is going to take that buy side liquidity. Below this buy side liquidity, I had this buy side liquidity here, this high and that high. They were the relatively equal highs. If you are with me in my Discord group, you already know that I have shared it. Okay, so I found my entry to that specific gap where I took my entry around this gap. It's not showing over here right now. So from that area, I took my entry. Why is that? I'm now going to explain that. Okay, so actually from the 50%, stop loss was just below that low, that candle low, that was the stop loss. My first target was that buy side liquidity, which was near about 73 handle, something like that. Until this area, that was my first partial, and my target was this 15. There was a 15-minute gap until 130 handle. I guess it was until this area exactly. And yeah, 130 handle. That was my last or opportunity. When market start to go here 53 handle, I put my stop loss to the break even. Market stopped me out, then give me the run. So I shared it in my Discord. Why I was looking for that area? Because when market came here and made for the first time this buy side setup here, market structure shift, fair value gap, tap to this fair value gap, started to go higher. I wasn't convinced here to take the entry from that first entry point. My bias was bullish, all of you know that. I was not confident enough to take the buy from here. The reason is when market started to go higher, it left some kind of sell side liquidity around this area, this low and that low. They are the relatively equal lows. So I was a little confused that I was thinking this market will fall again to take that liquidity, then it will start to go higher. But when market didn't take this sell side liquidity and made another market structure shift over here, sorry, not there, here, another market structure shift from there, I started to believe that this gap will stop the market and send it here until the 15-minute gap. Around that area, there was the 15-minute gap. I was looking for 2-minute chart as well. So today you will see that I will spend some time in 2-minute chart here. In 2-minute chart, all you can see market has taken all of this liquidity has been taken over here. That was the market structure shift. This is the fair value gap. Around this area, market trade that fair value gap. That was the order block, lowest down close body close candle. Market has traded the order block from here by that specific candle. It was the order block. This was the propulsion block. When market came back again to the top of this propulsion block, I took my entry over here, depending on that 2-minute chart, depending on that 1-minute fair value gap. Exactly from that propulsion block top, that was my entry. When this candle came here, I pushed my button to the top of this propulsion block. Target was this area. Instead of that area, that high and that high, that was the relatively equal highs. My partial level was there, and this is the 15-minute gap over here. There was the 15-minute gap. Actually, this was the gap, I guess. Yeah, that was the gap from 15-minute chart. It was my target. This 15-minute gap or that gap, I guess this gap was the target. I don't remember was the 15-minute gap, but that was my target. This was the reason to take my entry over here around the PM session. As my bias was bullish, my first opportunity to take the buy was here around this area. When I got the market structure shift there, that was my first opportunity to look for the buy from that gap. Just was not so much confident to think because market left that sell side liquidity. If this candle could take that low, then I would push my button from this gap with confidence. In the meantime, this is the gap. I showed you two example last AM session. Showed you two example. This is the first gap over here. I wanna see that market will work with the upper portion of this gap, and the most recent bearish gap that should be broken. That means market has to close above this gap. It has to close above that gap. After closing to this gap, wherever you will find the next gap, which is over here around this area. If you remember in the morning session, I showed you this entry two times in live. Second entry opportunity, market didn't give us the entry opportunity, which was over here. If you remember, what was there here? That was the second opportunity to take the sell around this gap. After doing everything, that was the opportunity, market didn't tap over here. This is the same logic over here. Tap to this gap, that should be the entry here. That gap, stop loss has to cover this gap. This gap has to cover. So stop loss has to cover this gap, which was 42 handle or something like that, was not able to take it, and whatever your buy side liquidity is, you will target that buy side liquidity or the 50-minute last gap, which was here around this area. Until this area was my last target over there. This is the same kind of entry opportunity. Market came back again to this over here around this gap, to the top of this gap one more time. The thing you have seen here around this area, if you remember, for the next time, tap to this last gap over here, which I was looking for. Same thing happened here. Then market started to go higher. The lowest down close body close candle is the order block. If you remember this one, the highest up close body close candle was my order block here. Trade that order block, keep falling. Around this area, lowest down close body close candle is gonna be your order block. Trade that order block one more time here. Trade it, started to go higher. That was the opportunity. I didn't take that entry. Depending on that, I was looking for 22 YT model, which has created over here after the market structure shift. That was the bullish fair value gap. Tap to this bullish fair value gap, was not confident enough after seeing this sell side liquidity, didn't take the entry over there. So finally found the opportunity to take the entry before 345. I put my stop loss here before 350, because 350 candle can be an extreme candle toward the sell side liquidity. Whatever sell side liquidity you will have, that can be an big run toward this sell side liquidity. So I had to put my stop loss to the break even. Unfortunately, that specific candle stopped me out to the break even, and then every single candle went toward my direction. My thinking was absolutely right, but the market was little messy, which you are seeing. Actually, most of the time it is messy, and it stopped me out before reaching to my target. Shit happens, and now I'm expecting that shit is going to happen almost every of the time, because until 2nd of February, it's really messy price action. And to be honest, after Nvidia, what happened yesterday, like $500 billion loss, this is now really tough to trade this market. But yeah, still we'll try to find out the way. So let's see how it is going to work. Okay, anybody has any question about this PM session entry, the things I showed you? All you have to do is you have to find out your bias first. What is your bias? Why that was my bias yesterday? What happened? Actually, you can see after market close over here around this area, market open, trade a bit lower, directly went toward that buy side liquidity. It didn't give a shit with anything else, just simply take that buy side liquidity. So if I were trading maybe in this Asian session, I would wait for this new day opening gap. I talked about this a lot of time. If you have some buy side liquidity that should be taken in the PM session, and you saw that market didn't take that liquidity around the PM session, then what you will do, wait for the new day opening gap, wait until market doesn't close above this new day opening gap. When it will close above this new day opening gap, which is here for the first time, start looking for a buying opportunity. Any kind of setup you will get around this area. There was no setup at all. Then market came back again one more time, closed over here, come back again to this last gap, here to that last gap, came, then gave you the entry opportunity from here, that inverse gap. trade that inverse gap. I mean, sorry, not there, not the inverse gap from the breaker block here to that highest up close body close candle. According to the 22 YT model, from here market structure sheet, fair value gap order block has been traded. This was your unfilled gap, as you can see here. That was your unfilled gap that has been filled here 100%. You will look for low, high, lower low. For the first time, market has closed above this word. I mean, sorry, above this breaker block around this area. Trade that breaker block, take that buy side liquidity. It is the new buy side liquidity, but previously the buy side liquidity was around this area. Take that buy side liquidity. So if you knew that what you were doing, then that could be your entry until this buy side liquidity. Stop loss is going to cover that breaker block a bit here. I mean, wherever you would love to put it, and until this buy side liquidity, that could be your trade around the PM session. Sorry, around the Asian session. Very simple logic. If you work with the logic, it's gonna be very easy. Okay, this is the 9:30 open. I'm not going to mark this regular trading hour. As you can see, there is no opening gap, almost zero opening gap around 9:30. So would love to keep without the opening gap, would love to look for the first presented gap. Yesterday, market has provided us 25 handle from the first presented gap, clearly 25 handle. Today also I'll look for the first presented gap, 25 handle, and as you know, until market is below this new opening gap, I'll keep looking for sell here until it's not broken. So to the top of this last fair value gap from 15-minute chart, I'll keep looking for sell, which is around this area. So the last fair value gap is not over here in 1-minute chart, but look it from the right hand side. This is that fair value gap from the 15-minute chart. Until it's not broken, I will have nothing to do. Below this new opening gap, I will look for sell. Above this last fair value gap, I will look for buy. So I will be in range bound in this two area. So this is the first presented gap around 9:30, I guess. Yep. Sorry, 9:31. So this candle is 9:31. I believe that this is gonna be the first presented gap according to me and ICT. Both of us will be agreed with this first presented gap. I will look for 25 handle just to observe it. Okay, can it provide me 25 handle or not? I talk too much. It will be agreed both me and ICT himself. So this should be the first presented gap. I'll adjust it if it doesn't. I mean, if it do something else. Tap to this 15-minute gap. Okay, until market doesn't break this one, I'm not looking for sell. If this gap is less than 5 handle, I will not mark it as my first presented gap. So it has to be at least 5 handle. Still now it is valid. So now I will look for 25 handle from this gap. Can it provide me 25 handle from that gap? From there, stop loss has to be above the candle which has made the first presented gap valid, which is 41 handle, to be honest 44, whatever it is, and target should be 25 handle. I'll just put it in the logical way, but obviously if I would go for this trade, I would never put the stop loss over here. I would go for 20 handle maybe until this area. I would go for something like that, but I'm just putting it according to the logic where my stop loss should be, just to observe can it work or not. So that could be my entry, and target is 25 handle. Can it provide me 25 handle? That is my interest to see. Just 25 handle. If I put my stop loss just one tick above this first presented gap, maybe one tick above this first presented gap, that's gonna be 23 handle. For example, if I was going for this trade, my stop loss would be just over here. I would take that risk for 23 handle, but I'm putting it according to the logic here, just according to the logic. Can it provide me 25 handle? That is all I'm looking for. Can it provide me 25 handle? This was yesterday's PM's, I mean, yesterday's first presented gap from yesterday, okay? That was yesterday's first presented gap. For the first time, market came to this first presented gap for the first time here. I'll look for 25 handle. Maybe put it around 22 handle. Make it to 1:1, okay? Just make it 1:1 here. You got your boom yesterday. And this is today's 25 handle here. 25 handle. Exactly 25 handle. This fair value gap is a logical level to think about a sell, but as I told, until market doesn't close below this fair value gap, I'm not going to take the sell. When it will close below this gap, I will start to look for sell for this sell side liquidity. To the top of this daily gap. So from there to there, it's a logical sell. From there to until to the top of this daily gap. I will wait until that area. It's a sell over here. Why is that? Because after reacting from this new day opening gap low over here, made this first presented gap after taking all of this buy side liquidity. This is the market structure shift over here. Market has traded this market structure shift over here. I mean, sorry, fair value gap over here. Made the order block highest up close body close candle. It didn't close below this area, but it's still as according to IC2, when it closed open this one, it can work as an order block. But still, this market can come back again to trade this order block level. So I have to cover the order block opening at least from this area to until to the top of this daily gap. So my stop loss is just to the top of this daily gap. Sorry, my target is to the top of this daily gap. From this gap, it can maximum reach until the 50%. That is the most logical level. It can maximum reach until this area. I really don't want to see that. It will fully fill this gap over here. I will take my decision after seeing that this market has closed below this 15-minute fair value. Then I will go for that. If I would love to go for this entry, I have to make sure that my the contract size is the lowest contract size. Maybe one micro contract or two micro contracts, something like that. Because I am going against my interest. I didn't wait for the body close below this 15-minute gap. So if I would love to go for this trade, I have to make sure that one or two micro contract for that 61 handle. I mean, if I get stopped out for 31 handle, maybe it's not gonna be a huge loss. So how much it will be, the contract size, how much it will be, just let it go. But this is that entry opportunity until to the top. As I'm expecting this is gonna be broken and market will go for the sell side liquidity. That is why. But as it is risky until market doesn't close below this one, I have to make sure that my contract size is the smallest one. The smallest one. And obviously I'm not going to hold it until 61. In between, I'll try to take a partial, maybe around this area, anywhere. I have to make sure that I have taken a partial. Wherever you want to take the partial, it's up to you. Just make sure that you have taken some partial in a level, wherever you feel good. This is for your learning. You don't need to push the button with me. Please don't do that. I'm explaining the logic over here. So work with the logic. Always keep that in your mind. You have taken the partial is the most important part, so make sure that you have taken the partial. For me, the best area to take the partial is 15 to 25 handle. Any of this level, that can be the best area to take the partial. As I told, it can maximum reach until this order block, which is the consecutive order block, according to me, it didn't trade the order block, so it can go until the order block one more time. Though I don't want to see that, I would love to see it will respect maximum until the low, sorry, until the 50% of this gap. The way it has been reacted from there, I would love to see it will be reacted from like the same way over here to that gap. If it is overzealous, then it can maximum reach until the open of this consecutive order block here. Though I don't want to see that. At least before tapping to the top of this daily gap. I wish that it will keep falling for this sell side liquidity and then it will start to go for that buy side liquidity. So first interest to see it will go for this sell side liquidity. Just make sure that you have taken some partial wherever you feel good, because I don't know if I have anything from on mid chart or not. Yeah, maybe below this low, maybe below that low, around this area you can try. Still that is too far. Just try to take some partial wherever you want to. I am not going to tell you where you are willing to take the partial. Just make sure you have taken some partial. That's all, brother. Partial is something that will make you profitable. Trust me. Partial is something that will make you profitable. Just take some partial, put your stop loss to the break even, rest, let them go. Until this sells side liquidity, okay, let it go, no problem. Until to the top, which is the most logical level, because after reaching over here, it can react from this market. It can react from there. So please make sure that you have taken some partial. Anywhere you want. Is Outlander over here? Again, I can't put my stop loss smaller now because it is highly volatile. So my stop loss is should be in a area. It can be like 25 until 30 until something like that. So after taking that partial, maybe it will, my stop loss should be to the break even, because I have got some partial over here, right? Around this area, I got some partial. Maybe until this area, how much it is going to be? 47 handle. After taking 47 handle partial, if you get stopped out to the break even, you should not care about that. It doesn't hit your target. You don't need to give a shit to that. Oh, okay. Outlander. Yes, I took it. I mean, the first presented gap, you took it, right? I'm sorry, brother, to ask you every day because I want to build your confidence for the first presented gap just for you. I'm not saying this to any of you except Outlander. Only Outlander. No, no one else. My target to the top of this daily fair value gap. I believe that it will go through this daily gap for this sell side liquidity. Don't wanna take that risk, so we'll target to the top of this daily gap. So if it can reach until to the top of this daily gap, that is my trade is done. I'm not so much greedy over here. I want to be little conservative over here. That's all, brother. It is volatile, Outlander, so it could be little bigger stop loss. At least make sure that you have made it 1:1. So 25 handle target or 25 handle stop loss. Either way, I mean, even if you get stopped out, you are going to take a loss for 25 handle. As you were seeing that most of the time it is working. Out of 5 days, it is working 4 days, 3 days. So you will be profitable. You don't need to care about that 1:1 at least. Okay. So if it tap to this high of this daily gap, that will be my boom. No, it didn't yet. So let's see if it can provide it or not. If I were trading, I would get a stop out already. When this candle has closed, my stop loss would be there. I would get a stop out already. But according to you, as you don't like the trailing stop loss, so stop loss has to be to the break even. Even if it doesn't work, you'll get a stop out to the break even after taking the partial. If I were trading, I have already got a stop out over there. Around to just to the top of this candle, I got a stop out. Not thinking about buy. Remember, I'm not thinking about buy. I saw that this candle has closed below this 15-minute gap. So I'm expecting any kind of higher run now to look for an again sell until to the top of this daily gap. If this candle could tap to this daily gap low, I wouldn't look for sell anymore. As it didn't tap to that daily fair value gap high here, I would keep looking for sell. So if it go back again to this area, I will start to look for sell again before tapping to this top of this daily gap. Otherwise, I'll just miss this trade. I'm okay with that. If I were trading, I would get a stop out over here. When it go at just one tick above this high, I would get a stop out over there. So I wouldn't never get this boom over here. I would get a stop out over there. But according to the rules, your stop loss should be to the break even, and you have to cover this parallel gap. Now tell me who took this entry. Just tell me that. Anybody took this entry. Until market is below this new day opening gap, you should keep looking for sell for the sell side liquidity. You will expect that this gap is going to be broken, this gap is going to be broken, then market is going to take that sell side liquidity. You should be thinking like that way. If market is above this new day opening gap, you will start to look for buy side liquidity. You will expect that this last parallel gap will be broken, then market will take that buy side liquidity. Brother, can you explain the partial one trading view, how to take the properly best way? You have to put the limit order. So for example, I want to take a partial around this area. So I took a five contract entry. For example, that is my 5 contract entry from here. That is my 5 contract entry. Now I would love to take a partial here for 3 contract. So I will make it 3. I'll come here to this plus sign. I'll put a limit buy. So here, okay, it won't show here because it should be below the price. So something like this, you will see that there is a buy limit here, buy 3 contract limit. I have to put a buy limit over there. So when it will, that is a sell entry, I will put buy limit. That is a buy entry, I will put sell limit for the partial. 21096, 21096, where is it? 290. Okay, you are looking for this sell side liquidity. Oh, obviously, brother, you can look for that. I mean, as I told, if you take the liquid, I mean partial, you can hold the trade until this sell side liquidity. But remember, this bullish gap is strong from the daily chart. It's strong. It can stop the price, send it higher again for that buy side liquidity. It is possible. So just make sure that you are safe. Just make sure that, okay, because this is the strongest gap. Though I believe that it will be broken, so it can make a bear gap over here. It will come back to this bear gap, then again make a bearish setup for this sell side liquidity. So there can be little, you know what to say, I mean little move toward the buy side liquidity. I will start to look for buy if and only if market close above this new day opening gap. In the meantime, if it close above this fair value gap, then I will see this is a fake breakout. If this candle close above this fair value gap, then I will start to look for and buy from this area to that area. Same thing. Whoever has taken this entry, you should be profitable, brother, because it's 60 handle. You should be profitable. Don't touch this market anymore. Whoever taken that first presented gap and believed it, until 25 handle, at least 25 handle, you should not touch it anymore. I don't care how beautiful the price action is. Don't touch it anymore. You are profitable. Your trade is done. You're you are profitable already. Who are struggling to pass the challenge account, to pass the to get the first payout, you are struggling because you are taking too many entries. You are inspired by someone like me who are showing you 7,000 profit, 20,000 profit, 200 handle profit. You are going to be deceived by those people like me who are showing you 100 handle move, 200 handle move. I caught that huge move. You are going to be inspired by me. You are trying to do the same thing. You are blowing your account. Please don't do that. You are profitable until this area, which is the most logical level. 60 handle, not small, brother. Trust me, it's not small. Got your profit? Stop. Don't touch this market anymore. This fair value gap, whatever fair value gap it is going to make, that is a buying opportunity from here. Why is that? It is respecting this 15-minute bullish gap. This gap is not that much important anymore. It can be a fake breakout. Now it will start to go for that buy side liquidity. So from this gap to until this buy side liquidity now is high probability. If it provide any entry opportunity, by the way, that is now a high probability now. This is the most strongest fair value gap, as I told. Even I don't care about this sell side liquidity when I have this strongest fair value gap, because this is an obvious liquidity. Market can go for that later. Right now, I will think about this bullish gap until this buy side liquidity. In the meantime, I have this nude opening gap that can be my target. So if I would love to look for a buy, I'll try to take a buy from this gap. If it come up, obviously within 3 candle, stop loss has to cover the 50% of that week. It has to cover that 50%. So it should be at least there, 28 handle. Market structure shift after. You can see me, right? It can be failed just if it started to react from this order block. I don't want to see that. It will start to react this order block. That was an unfinished business. It is a high probable buy. This is now a high probable buy to me. From there to until this area, high probable buy, but it can be failed. So I would love to take a partial here first, around this area. Then I will hold it until this area, because this is going to hold the price. That is the fake breakout below that 15-minute last fair value gap. That is the fake breakout. Market is going for the buy side liquidity now. Just make sure that you have taken partial the low of this first presented gap, which is 38 handle, not a small amount of money. Trust me, man, it's huge. So make sure that you have taken the partial over here. Then you have put your stop loss below the order block. So you have to take a little risk over here. You can't put your stop loss to the break even. Reason, you have the order block over here. This down close candle is your order block. After taking the partial, try to put your stop loss one tick below this order block. I mean, if you want, okay, I'm not saying that you have to do it, but in my opinion, you should cover that low of that order block. It's a high probable buy now for me. From there, that should be partial. Okay, the low of this first presented gap, that should be the partial, and target should be here around this area. Around this area, stop loss should be there now, around just one tick below this order block. That red news is not high impact news. That red news doesn't have any relationship with today's market. I am not talking about this red news. That is why. Okay, so it's kind of news like crude oil, something like that. So I really don't care about that news. So the guys are I mean thinking about that news. You don't need to think about that news. It's kind of a news that doesn't have any value. Make sure that you have taken a partial over here. Just make sure that it should be taken the partial over here. Even though it will reach over there, you should be taken the partial over here to the low of this first presented gap. Until market is below this first presented gap, every kind of buy is invalid. So you have to make sure that there you have taken a partial over here from this gap, taken all the liquidity, market structure shape, fair value gap, tap to this fair value gap, first partial 38 handle, target is here 85 handle. Please don't think that it will come until this 50% of this first presented gap you will take the partial over here. Don't think like that way. This is called trading. If you hold it until this area, if it works or not, you want to see that, you are not trading, you are gambling. Don't do it. Tap to this low, you have taken your partial. Put your stop loss one tick below this order block, wherever it is. Just take that 5 handle risk. Okay, you have to take this 5 handle risk. Hold your trade the most logical level, which is over here. That is the most logical level. Don't look for that buy side liquidity. Please don't do it until this area. Try to hold it. If you get stopped out here by 5 handle loss or 6 handle loss, accept it. After 38 handle profit, if you get stopped out for 6 handle, let it go, brother. Just accept it. Don't follow my trailing stop loss, because if I was trading, my stop loss would be one tick below that order block open. Just one tick below that order block open, but don't follow it. I'm telling you the real thing, how you should do that. But if you didn't take the partial over here, you are just disrespecting everything I'm telling you. So you are gambling over here. I put my target here in a logical level. That should be the most logical level. You should have closed your trade over there. Never ever go for the extreme liquidity. Never ever do that. Follow the things I'm telling you. High probable, when this market started to make this, I clearly told that this is the high probable buy. It can be failed if and only if it is the order block retest. It can be failed just because of that. Otherwise, this is the high probable buy. Just low probable sell. This one is low probable sell. High probable buy. Guys, I have already talked about this red folder news. Please, I think I have cleared that things. This red folder news, I have no intention to talk about that red folder news. So it's my opinion. If you think that you want to trade after that red folder news, please do it. I don't give that much priority to that red folder news. If you want to give the priority, do it. Remember, your target should be there. When this candle will tap to this new day opening gap low, your stop loss has to cover the lowest, last down close body close candle. There should be a stop loss when it will tap to the new day opening gap low, because that low has the power to stop the price and send it lower again. As I'm taking little more risk until the 50% of that new day opening gap, I have to trail my stop loss. That should be your partial. Let this market go toward your, here, your stop loss should be there right now. 5 handle stop loss should be there. Yeah, obviously it can stop you out, but you have to take that risk. When it will tap to this low, exactly tap to this low, put a stop loss one tick below that down close candle. It tap over there, put it here. You got stopped out, be happy with that. You don't need to think about that whole run, at least below this area. It is the most logical level. Their market should not go. When it tap to this new day opening gap low, here, see, your stop loss should be there now. You don't want to do that, it's up to you. But if I were you, I would put my stop loss over there. I would get stopped out here. I'm happy with that. I have no problem with that. But your stop loss should be there. Any kind of fair value gap it will make sure your stop loss is below that candle which has made this fair value gap. Trail your stop loss too fast. This is the area you have to trail your stop loss too fast, because now market is working with this new day opening gap. It can be a lot of consolidation. Don't fall into that trap. If this candle can make a bullish gap here, your stop loss should be there before hitting your target. In the meantime, if it hit your target, then you are done. Don't hold your trade for, I mean, sorry, if you're trading, yeah, obviously you can hold it until this area. I'm talking to those people who are not, who are actually following me. That should be your trade. Your trade should be done over there. Your trade should be done here, okay? But if you are trading your money, please take your decision and hold it. If you want to hold it until this buy side liquidity, please go for that. But like, if you are with me for so long, please close your trade around this area. It will go over there. I know that it will go over there. I don't give a shit. I don't want to hold it until this area, or at least close your maximum position over here, and then rest one or two micro contract or on contract, whatever you want to do, hold it until this area. But maximum contract should be closed over here. Follow me, okay? It will work. Okay, perfect. No worries. I will take the lowest area. Market open 9:30. Our first 25 handle profit, then this profit, and finally that profit. Do you need trade anymore this market? And obviously let me know if anyone took that entry. This is the high probable entry. This is the low probable entry, low probability. It can be, I mean, it is 50-50, something like that. That sell is 50-50. This is like, I will go for that, like with 90% confidence that it will work. 90% confidence it will work. Remember that fair value gap as a fake breakout from the strongest fair value gap. At the beginning of this trade, I talked about this fair value gap. Only bullish PDRA I have in this whole market. I have only bullish PDRA. This is that gap. From there to until the 50% of that new day opening gap. But brother, it is going for that buy side liquidity. I don't care. I don't care, brother. I showed you where market can go, but I don't care about that. Anybody took this entry? Just let me know. Yes, it didn't expect that it will be traded 941. Let me check, brother. This one 940. Yeah, it's a perfect inverse gap. It can be traded, brother. It can be traded 100%. This is the perfect inverse gap. It can be traded, but my stop loss should be at least below that immediate rebalance candle here. That candle low. That should be the stop loss, which is going to cover the inverse gap top as well. I didn't notice it, to be honest. If I noticed it, then my stop loss, I would put it below the 50% of that inverse gap. To be honest, I didn't notice it. If I would noticed it, then I could put my stop loss. I would put my stop loss at least below this 50% of that inverse gap. Inverse gap doesn't need to be traded. Always, it doesn't need to be traded. But if it trade, that's a good thing. Obviously, that's a good thing. And this is the perfect inverse gap, by the way. Now, what market will do? I don't know, brother. I don't need to know what market will do the rest of the day. Now I can be wrong. I can be, by the way, I will keep looking for buy. Obviously, when this candle will close from 15-minute chart, it will close above this new day opening gap. I will see this is the market structure shift from 15-minute chart. From the daily chart, you know that my bias is bullish. I'm looking for the bullish run from the daily chart. When the candle will close above this new day opening gap, I will see this is the market structure shift. There can be some kind of reaction from that last fair value gap to make a bullish gap. It will reach until this last gap, then react from there until the bullish gap, then start to go for that buy side liquidity. That would be my interest if and only if this candle close above this new day opening gap. If the 15-minute candle doesn't close above this new day opening gap, I'm not interested to look for any kind of buy. Nothing is valid to me. Nothing. If it close inside this new day opening gap, I don't care. It will work 100% for that buy side liquidity. I don't care. It has to close above this new day opening gap. Remember the way I use this new day opening gap. They are there for my direction. This new day opening gap, new week opening gap are for my direction. Okay. So I take my direction depending on that new day opening gap. Until market is below this new day opening gap, I'll look for sell side liquidity. Until market is above this new day opening gap, I'll look for that buy side liquidity. Here, that last fair value gap, please keep that in your mind. It can be respected That means market can give us little reaction from that last gap to make a bullish gap here from the 15-minute chart. Then it will tap to this bullish gap. I'll start to look for buy again for that buy side liquidity. This is how you will look for your trade. Israel, I showed that how to trail the stop loss today. I mean, I told that what I would do. At the same time, I told that what you should do for both this sell and buy. When I saw that this market has taken that boom, I would never get that boom because that specific candle will stop me out. I would put my stop loss over here. But according to the rules, your stop loss has to be to the break even until market doesn't come to this daily bullish gap. It has to be to the break even. So I would get stopped out here. When it came here around this area, I told that please put your stop loss below that order block. If I were you, then I would put my stop loss one tick below that order block. Open, not high, open, one tick below that open. I would hold it until that area. But according to the rules, your stop loss should be one tick below the whole order block until market doesn't tap to this new opening gap low. When it has tapped to this new opening gap low, the lowest down close body close candle should be covered by your stop loss. And then if it can make a bullish gap here, as you can see here, if this candle doesn't take that buy side liquidity or my target, then I'll put my stop loss at least one tick below that candle which has made this bullish gap. If you didn't listen to me, how can I help, brother? I told both of the things, what I would do and what you should do. But let me check. Anybody took that on or not? Okay, Archana, thanks for that boom. Justin, thanks for that boom. Thank you so much. Anybody took this buy? I need to know that. Anybody took this buy? Boom. Okay. So whoever taken that buy, you got 85 handle profit. Stop trading. If you want to pass the challenge, if you want to, what to say, I mean want to request for your payout, stop trading. Go to your paper money, start doing the paper trade. Don't trade it anymore. Market will be here, you will be here. Come back next day. Let's wait for the next obvious things that is going to happen. If this candle failed to close above this new day opening gap, I'm not looking for buy side delivery. I don't care even if it go for that buy side delivery. I don't care about that. It is falling, brother. It is going for that sell side liquidity. I don't think so. Until this body close below this new day opening gap again. I don't think so that it will go for that sell side liquidity. I will look for that buy side liquidity. I'll keep looking for. So I have to make sure that it has closed above this new day opening gap before taking the buy. By the way, Archana, you are here and I saw that Tamimi has posted in our Discord about the beginners course or something like that. Whatever you say, I will go for that for at least 2 or 3 days in a week around the PM session, at least for 1 hour. It's gonna be from the very basic, like what is fair value gap, what is order block, what is liquidity. It's gonna be very basic. Okay, so if you are okay with that, you guys are okay with that, then let me know. It's gonna be like the way you know nothing about ICT concepts, nothing. You will never listen anything about fair value gap. So I will show you everything from the very basic. So I will do that. If it is okay with you, just let me know. And every day I will just talk about some specific thing. You have to make sure that you have taken enough notes from there, and you will get at least 2 to 3 days between one lecture to another lecture. At least you will get 1 or 2 days. You will go hindsight price action and you will look for that area, that can you mark them by yourself or not. This is the only way for being profitable. Yeah, it will be in I don't need to record it. It will be the YouTube live stream. So it will be there. I'll just make another playlist and I'll go for that. But the thing is, maybe I will go for maximum 2 to 3 days in a week, not every day. That is the only thing. Right now, what market will do, I don't care. I'm looking here. This 1 minute chart, I'm not looking anything over here. Brother, now it will react from this gap and it will start to fall for this sell side liquidity here. For that sell side liquidity, I don't give a shit. I don't care about that. It will go for this sell side liquidity. I don't care about that. I'm not interested to trade right now until this 50-minute candle doesn't tell me that I want to go for that buy side liquidity, I want to go for that sell side liquidity. I will wait. If it doesn't provide me any entry opportunity, any kind of hindsight or any kind of things, I will do nothing over here. You want to take the sell from there, go for it, man. I'm not saying any of you not to trade, because I have showed you the high probable trade as well, low probable trade as well, first presented gap entry as well. Everything I showed you how to look for this market. You should be careful about all of the things I talked about before the market open. What about this gap? Why this gap is so much important? Clearly, I told that it doesn't need to take that sell side liquidity. It can stop the price, send it higher again for that buy side liquidity, because this is the strongest fair value gap. Only bullish PDRA in this whole market. Just this bullish PDRA. I don't have anything else. So it can stop the market for that buy side liquidity. Right now, what I'm saying, keep that in your mind. Mark this last fair value gap. It can stop here, trade that last fair value gap, something like that. You will see that it come here to this last gap, which is over here from 15-minute chart, then fall again to make a bullish gap from 15-minute chart. Then it will tap to this area, trade that bullish gap, go for that buy side liquidity. If this happened, I will frame the next setup. If that happens, I will go for next setup. If it doesn't happen, keep going higher and take that buy side liquidity. I will have nothing to do. It keep going higher, take that buy side liquidity. I have nothing to do. Brother, can I take a buy from here now? I mean, around this area, can I take this market structure shift? Maybe there is a fair value gap. It will tap to this fair value gap and it will take that buy side liquidity. Can I go for that? I can't go for that. You wanna go? Go for it. But I can't go for that buy. Even if it is a it is a probability, but I'm not interested to go for that. I need some kind of reaction from this last gap, which is I'm talking about this fair value gap. I need some reaction from this gap now. Here, any kind of reaction, it will react from that gap, make a bullish gap here, trade that bullish gap. I'll start to look for that buy side liquidity. Simply, I will look for that. It will go through this, take that buy side liquidity. I have missed all of my opportunity. No, I don't have any opportunity. It come until this area, come back again until the 50% of that nude opening gap, little mohawk here, going higher again to take that buy side liquidity. Yes, sir, I will let this go. I have no problem with that. But guys, I would love to remind you one thing, and that is my funded futures has 20% discount and 40% discount for both existing and the new users. It is valid until 31st of January. So make sure that you have used the code T2 Wizard. You will get this discount. If you are using your bank account to pay that bill, then you will get extra 5% discount by using the code T2 Wizard. Otherwise, it's gonna be 20 and 40% if you are new and existing users. For Tradify, which is a direct funding account, you will get 30% discount for the direct funding account, and for the growth and advance, you will get 50% discount, which you are going to get by using the code JAM, J-A-N, JAM. Okay, but make sure that you have used the link if you want. It will be really helpful for me. If you use the link, you will get the link in the comment or in the description. Tradify. Just use the code ZAN. When you will be in the website, you will see the code as well, obviously. It is also valid until 31st of January. And for Take Profit Trader, we have 50% discount. Make sure that you have used the code T2 Wizard to get that discount. Thank you so much for all of your appreciation. Okay, thank you so much. Okay, look over here what I talked about this last gap. I need some kind of reaction over there. That reaction will make a bullish gap around this area. What else can happen? This highest up close body close candle is the breaker block. Low, high, lower, low. So what can happen? It can simply tap to this breaker block, then keep going higher for that buy side liquidity. If it happened, I will do nothing over here. I will wait until a bullish gap around this area, then market will come back again to this bullish gap, which is going to be the unicorn setup. For some of you, unicorn setup. I will start to look for buy from this area to until this buy side liquidity again. If it keep going higher by tapping to this breaker block top, going higher, take that buy side liquidity, I'll let this go. Not interested to take that entry. By the way, thank you, Abdul Moti. Abdul Moti, you are here. By the way, who is Abdul Moti? I guess it's the dentist. Thanks, brother, for using the link for Tradify. Thank you so much, brother. Thanks for your appreciation. I really appreciate it, man. I have no word to say thanks to all of you who are helping me. Thank you so much, by the way, guys. I should give you more. I'm not able to give the huge to you, but I'm trying my level best so that you can learn this price action for free at least. And I'm trying my level best to give you the real way to look for this price action. Uh, Taslim Imon, you have to use the code T2 Wizard and you will get that 40% discount. You should get that 40% discount if you are the first time user. So before paying, you will just put the coupon. You will put T2 Wizard over there to that coupon and then press OK. If you see that it has got the discount, you have got the discount, then I mean, if you go over there, you will understand. Or if anyone can help, please help him to get the discount. You will get 40% discount. So whatever is the amount, the price of 50K account, then whatever it is, how much it is, anybody knows how much is it? The price, real price for 50K account for my funded futures, whatever it will be, just minus from there 40%. Then whatever amount it will be, just go for it. Just a second, guys. Hey, hey, when you will go outside, please don't forget that paper, man. Okay. And if you go out after 5, then I'll go with you. Okay, man. This is the time to wait. I'm interested to wait, but if any of you would love to trade, please go for it. I would love to wait a bit here to find out if it can provide me any entry opportunity. Then I will go for that entry. As I told, just keep that in your mind. I want to see that this last parallel gap will hold the market. It will make a bullish gap here. Then it will come again to this bullish gap. I will start to look for a buying opportunity until it is above the new opening gap high. I will start to look for a buying opportunity until this buy side. I can be wrong. Market can simply go and take that buy side liquidity. 100% it is possible, but I'm just not interested to think about that buy. Brother, it will be unicorn when there will be 50, I mean, gap. There will be a gap. Until there is not gap, there is no unicorn. So from 15-minute chart, this candle has to close first. When it will be closed, then there will be a 15-minute bullish gap. Inside that 15-minute bullish gap, you will have that breaker block. Then it is gonna be your unicorn. Until this candle is not closed, it's not your unicorn setup. Because this candle can simply fall and close the whole gap, something like this area. When it was falling, then this candle fully closed the whole candle. So there is no gap. This thing can happen over here as well. If this buy side has taken, I will have no more buy side liquidity here. So I will be unable to look for the buy run again until market make a buy side liquidity. Remember yesterday when market came until this area, make the buy side liquidity here. Then I started to look for buy. So all of this sell, I will let them go. Then I will start to look for buy again. Same thing here. If this buy side liquidity is taken from 15-minute chart, I will have no more buy side liquidity around this area. So I will not be able to look for any other buy after this buy side is taken. I have to look for sell, but until there is a bearish gap from 15-minute chart, I can't look for sell as well. So I will be doing here nothing until market engineered more buy side liquidity. So right now I have an opportunity to trade until this buy side liquidity is not taken. If it do that type of setup or create any kind of setup, I'll go for that. Otherwise, I'm not interested to take that entry. It's taken here. Still this body didn't close. So when the body will close, my trade is done until the next liquidity level. If it doesn't engineered any liquidity, I'm not interested to trade this market anymore. It went directly over here for that buy side liquidity, so I miss it. I knew it will go for that buy side liquidity. I just missed the entry opportunity. It didn't provide me the entry. Some of you can think this is the market structure shift, fair value gap, you want to take the buy here. It's called chasing the price. I'm not going to chase the price from there because it can simply react from this last gap and make the gap here from 15-minute chart, come back again to this gap, then it can go for that buy side liquidity. I would love to take that on. This one, I don't care. I will let this go. Do you understand this area? Because it is too much important to understand this part. You are seeing that it has taken that buy side liquidity. We knew it that this buy side liquidity is going to be taken, but no entry opportunity. Why is that? I'm forcing the market to take my entry from there. We should not force the market here. It's called chasing price. Market has come here to here already. Now you are chasing the price from there. Please don't do it. Try to take your entry at the beginning of the run. This is the beginning of the run. Try to take it from there. Not that 415 candle for bearish. 415 candle for bearish. 415 candle for bearish. This one. This one. It has been worked already, I guess. It has been worked here already. It may be tapped to this breaker block. Maybe I'm not sure here. Let me check. Yep, from that candle it tapped here maybe, then it fall. Take that all of this liquidity has been taken. So this job has done. If you are looking for a sell opportunity from the breaker block, for me it's not the perfect breaker block. For me this one is the perfect breaker block for the bullish bullish run. Best trading follow on all platforms. Thanks, bro. You are a G. Okay. What does that G means, brother? I don't know. I hope this is something good. Why you looking 15-minute body close for this buy side, bro? Body close means market will take that liquidity. Body close means if body can close above the liquidity level, then people will see that sub resistance has broken. Now it will work as support. Do you understand? That means the liquidity has taken over there. Now it can start to fall again if the body can close above the liquidity level. One more thing, if you have another buy side liquidity, which I don't have, but if you have, if you had another buy side liquidity around this area, around this fair value gap, look at that fair value gap. This is the strongest fair value gap. If you have any other buy side liquidity, this fair value gap is the strongest fair value gap ever around the liquidity level. If it didn't leave any sell side liquidity, which it didn't leave here, as I don't have any buy side liquidity, I am not able to take the entry over here. It is in deep premium. No, sir, it's not in deep premium. It's the area which gap is the strongest fair value gap around the liquidity level, the strongest gap. Actually, I don't have the gap here, but this buy side liquidity level was here around this area. Okay, then I actually outlined it around this area, but there was the buy side liquidity. If there was a gap here and market left some sell side liquidity around this area, which is obvious to you, this gap should be the strongest gap ever. Here I can see the inverse gap, which is around this area, which is the inverse gap from 1 minute chart. I don't know when it has happened, but this is the strongest gap. For the first time, market has closed below this gap. This is that area. Doesn't have the strongest fair value gap around the liquidity level. Oh, sorry, I have it. My mistake. I have it. It's not inverse gap, but it's the strongest gap around the liquidity level. So previously the liquidity was here, this high. Okay, that high was the liquidity. If this gap is around this liquidity level, this is the strongest gap. That gap is gonna be respected for the next liquidity level. If you have any sell side liquidity around this area, this gap is gonna be the strongest gap. But here it worked with the inverse gap more beautifully over here. That is the inverse gap that worked more beautifully here. For the first time, it has closed here, trade this inverse gap a lot of time before falling, which is the inverse gap. This is also this inverse gap, but this gap is something which is around the buy side or kind of liquidity level. This is that gap, which should work as a bullish or bearish depending on your liquidity. As I had the sell side, I don't have, by the way. Oh, I have this liquidity, this low and that low, relatively equal lows. Lot of sell side liquidity I had, this low, that low, clean lows around this area. Market never leave this type of clean lows, this low, that low, clean lows. Respected from that gap, didn't stop until this liquidity is not taken, which is clean lows over here. Never ever leave this type of clean lows. After taking this clean lows, then it retraced a huge run until this area. What it has made over here, this high and that high, clean highs, come back again until this fall, and then as you can see, it started to go for that liquidity level. Take that liquidity around this area. It has taken the liquidity, exact relatively equal highs, which is clean highs. If you see any kind of fair value gap around this level, whatever fair value gap you will get, that's gonna be your strongest fair value gap. It is the best if it make that fair value gap just according to that liquidity level, that line, which could be this gap according to the liquidity level. Then you have another area what is your buy side liquidity, then it will go until that area. Tapped to that inverse gap top from the 4-hour chart. Tap to this inverse gap. I'm interested to look for sell now. I'm not interested to look for buy. I'm only interested to look for sell now. It will keep going higher. I don't care. I will look for sell until to the top of this nude opening gap now. At least until to the top of this nude opening gap. Here, how can I use this area? Yesterday, I showed you the thing. Remember, if you remember or not, there will be a fair value gap. You will look for the bullish, most recent bullish gap. Market has to close this bullish gap. It can't work with the upper portion of this bearish gap. Then the next gap is gonna be a high probable area to take the sell until the next liquidity level or until the next most obvious level. After using some kind of higher time frame period, as you can see here, if I go to 15-minute chart, if I find any kind of fair value gap around this area, from 15-minute chart, I have this fair value gap from 15-minute chart. This is that fair value gap. Trade that fair value gap, will start to fall. All I need a gap here, bearish gap. Market will work with the lower portion of this bearish gap. At the same time, it will close below the most recent bullish gap. I showed you 2 examples yesterday in live, and if it can provide me that, I will go for that. I'm not interested to look for buy. I'm only interested to look for sell. The reason is I don't have any buy side liquidity. So how far it will go, I don't know. So I'm preferring to take the sell. How far? Until the new day opening gap. I don't have the sell side liquidity except this or this one. But until this new day opening gap is not broken, I can't think about that. When it will come here to this bullish gap, I can't think about this sell side liquidity. Here, I will only look for the selling opportunity. No buy is valid anymore to me. All I need some kind of setup over there. Inverse gap. The thing I told about the bearish gap, 50%, all of these things, 22 YT model, anything. I need some kind of sell setup now, at least until to the top of this new opening gap. If any of you are looking for buy, go for it. I'm just saying my opinion. If you think that it will go for that weekly opening gap, please hold it, brother. I am showing you my understanding. So I'm not ICT himself. So I am telling you my understanding. So I am interested only to look for sell. If you think that you wanna work with ICT things, I think you should hold your analysis. Okay, you should hold your belief. You should not change it. I'm thinking the way I'm telling you that things. I'm just not interested to change it. I will just explain it. As you can see, it has made this bearish gap, which is below this gap. So this gap is not important. Here, this gap is important to me. I want to see a body close below this gap, below that gap. At the same time, I would love to see market is not going to work with the upper portion of this gap. So let me mark it here. If you are looking for buy, brother, as you told, please go for it. I told you why I don't want to see that this market will go for that opening gap, new week opening gap, or what is that, why it should not come here. I told that at the beginning of this stream. So I'm not interested for that. I would love to see that it will close below this gap. So body has to close below this gap. It can't work with the upper portion of this gap. Whatever gap it will make after closing below this gap, the bearish gap it will make, that is my selling opportunity. Stop loss has to cover this gap. That's all. If it keep going higher, I have nothing to do. It will keep going higher, I have nothing to do at all. This sell is low probable sell. It's not high probability, it's a low probable sell. It has to close below this gap. it can't work with the upper portion of this gap. If that happens, then my sell is valid. Otherwise, I'm not interested to take the sell. It will keep going higher. I'll let this go. I'm not interested to take the buy as I don't know how far it will reach. So keep looking at these things. Please don't take the entry. This one, it's not a high probable trade. It's a low probable trade. Tapped to the low of this gap. I'm happy to see that market didn't work with the upper portion of this gap. All I need to see, can the candle close below this gap now? If you are looking for buy, please go for it. I can be wrong absolutely over here. Market can keep going higher. If it started to keep going higher, I will do nothing over here. I'm only interested to look for sell after seeing that market reach until to the top of this, which is that 4-hour chart. If you come to this 4-hour chart, this is that inverse gap from 4-hour chart here. See, it tapped to the high. I want to see the body should close below this inverse gap 50%, then it will fall again. The next liquidity level is this sell side liquidity. It is valid if and only if market can close below this daily gap. Then it will start to look for this sell side liquidity. Until then, from my higher time frame, you know that market should go for that buy side liquidity from my higher time frame. But in lower time frame, I don't have any buy side liquidity. No buy side liquidity at all. So I can't look for the buy. I have to think about the sell here. Until market doesn't make the bull buy sell liquidity, I can't look for the buy. I am repeating these things because you can get confused. So please don't get confused. It worked with the 50% of this bearish gap. Happy to see that. Nobody has closed above the 50% of this gap. I'm happy to see that. Wanna see that market will close below the 50% of that week now. That week 50%. I would love to see that market will close below this 50%. For example, if I was looking for buy, then I would love to look for that market is not going to close below this 50% of that week. I would look for that. If I were looking for buy, as I don't have the buy side liquidity, I'm not interested to take the buy. If this candle close above this fair value gap 50%, no sell is valid, at least not depending on this setup. No sell is valid. I will have to wait. So I don't want to see anybody close above the 50% of that gap. Nobody should close above the 50% of that gap. If I would love to look for a selling opportunity by depending on that specific model. Now this model is not by ICT himself, so you can get confused. I showed you 2 opportunity yesterday. This is the 3rd opportunity. If it may around the PM session, it has made the same opportunity to take the buy. If it work like that way, I'll go for that. If it doesn't work like that way, then I will keep waiting until market doesn't make a buy side liquidity. I will not go for the buy. Whoever would love to look for the buy, please go for it. Maybe it will react from this gap the way it has been reacted here. It will keep going higher. I will let this go. Mahdi, you have 39 points. Congratulations, brother. All I want to see body close below this 50% of that week. Okay, as I'm looking for sell. If I were looking for buy, then what I would look for? Body close above that 50%. Nobody should close below this 50%. If I were looking for buy, so that could be my entry from that week 50% buy entry. Would love to go for the buy side liquidity, whatever it is. If my bias was bullish, as my bias is not bullish, I want to see this bullish PDRA will be broken and that bearish PDRA will hold the market. That means body is not going to close above the 50% of that week, and it is going to close below the 50% of that week. Okay, so something like that. At the same time, I have to wait until market doesn't close below this gap. If it respect from there, then closed below this gap, any kind of fair value gap I will get, I'll try to take the entry from there. Stop loss has to cover this fair value gap until to the top of this new day opening gap, because this is the most logical level. Market can maximum fall, or maybe to the last fair value gap, which is over here from 1 minute chart until this area. Whoever would love to look for buy, go for it. I'm not saying any of you to hold the thinking with me. I think I'm clear. I'm not giving you any signal. I'm sharing my knowledge. I'm sharing my expectation. I'm sharing my thinking, what I'm thinking right now. For our inverse gap top, 15-minute fair value gap here, would love to see it will keep falling. Whoever is profitable already by that beautiful run here, by that beautiful run, whoever is profitable, don't try to enter into this market again. Market has done its today's job, has been done over here. The buy side liquidity has been taken already, so job is done. Rest of the day market can keep consolidating. The job, remember what did I, okay, if you are my YouTube member already, you know that every single day market has a job to done. The job is done over here already. So if it wants to provide me another run, then it has to show me the logic why it is going for that run. For example, I have this sell side liquidity. At the beginning of this stream, I told that today I want to see the manipulation. It will take both buy side liquidity and the sell side liquidity. It should take both of them. Okay, it should not be one-sided run. It should not be like that. So first thing is I want to see a body close below that weak 50%. That should be close below this weak 50%. Nobody should close above the 50% of that fair value gap, concurrent crossment. Nobody should close over there. As you can see, until now, nobody has closed over there. So I'm still holding it. That market will keep falling. Rest thing is market has to close below this fair value gap. It has to close below this fair value gap to confirm that, brother, I'm falling for this new opening gap. That is the confirmation. I would love to see that this weak 50% is now will work as a resistance. That means market will respect that weak 50%. I want to see like that way. That line should be worked as a resistance now. Sell is not valid until market doesn't close below this fair value gap. No sell is valid. Keep that in your mind, please. Aditya, standard deviation is valid when market is at the all-time high. Standard deviation is something that will help you to understand the whole price action where there is no price action. Inside the price, standard deviation, I don't care about that. So when it is at the all-time high, I will use the standard deviation. Otherwise, if I have the price action, I will use liquidity, fair value gap, order block. I will keep using them, not standard deviation. The points are something that will help me to choose the winner of the uh, funded account. I mean, for the what to say, I mean, the giveaway. Okay, so I would love to look for the winner depending on the points, and you will get the point. If you spend 1 hour, you will get 5 point, I guess, something like that. Okay, all I need a body close below this gap to look for an selling opportunity. So the body has to close below this fair value gap, and whatever fair value gap it will make over here, that is going to be my selling opportunity. Stop loss has to cover this fair value gap. Now if you see that it's going to be a huge stop loss, don't take it. If you see this thing, if it is a huge stop loss, don't take it. But as yesterday, remember, it was like 25 and something like that. If it is something like that, go for it. So if this candle can make a bearish gap, wherever this bearish gap is going to make, I don't care. That's going to be my selling entry. So I will just outline it. I'm not going to take it because the stop loss is going to be huge, I guess. So yeah, something like that. It's going to be huge, 40 handle or something. So I'm not in. Nobody, please take this entry. If there is no fair value gap, there is no entry. There is no fair value gap, there is no entry. So from this gap here, this is the gap. From that gap, this candle tap to this gap. Stop loss is covering this gap over here. That gap should be covered maybe little above, little tick above. Okay, until this new day opening gap top here. In the meantime, make sure that you have taken some partial, maybe here around this area. I don't know what is that. What is the, oh, okay, that was the last gap. So to the top of this last gap here, you can take a partial around this area over here by believing that this is falling for that new day opening gap. Please don't take it. This is low probability. It's not a high probable trade. It's a low probability. So please don't take it. Just for your observation. Keep observing this thing. It's a low probability, low probable trade. Don't take it. Just observe it. I don't want to see anybody close above that line because this week should work as an resistance now. So if the body doesn't close above that line, that is the great case of scenario to me. Yeah, obviously it can trade this gap one more time, to the low of this gap one more time. It is acceptable. But if the body doesn't close above this line, that is the best case of scenario to me to think about the sell. If any of you would love to look for the buy, if this is your buying opportunity, please go for it. I have no problem with that. Please go for it. From 15-minute chart, all I can see it, market has tapped to this bullish entry gap over here. If it started to go higher, for example, it started to go higher. Okay, it closed above that high around this area. There is a fair value gap, that is a buying opportunity again. But how far it will go, I don't know. So I will not take the buy. I'll let the buy go. I will try to take this entry if it supports, like for me here 26 handle is okay. I mean, it's not that much. 26 handle on this high volatile, it's okay. As it is low probability, please don't take it. I'm gonna repeat it. It's not high probability. Not take it. Just observe it. How you are going to use this model. This is just for your observation. I would really appreciate if it couldn't close above the week 50%. That would be the best case of scenario. It can maximum reach until this fair value gap. It is acceptable. Tap to the low. Okay. I need speed now that will close below this gap. A body close below this gap, and I need the speed now. The reason is market is inside the macro. So if the macro started to send the market higher, I can get stopped out. So I need some speed now, at least until the last gap, until the here. Okay. So even if it failed to reach until to the top of this new opening gap, I want to see that market will reach at least until this last gap, until here, and I need speed now. That speed will close below this gap, and when it will close below this gap, I don't expect any candle close above this gap again. So first it has to close below this gap. It will work as a perfect inverse gap. If it doesn't do that, then I'm in risk. So I need speed now because it is inside the macro now. Macro run can be very dangerous. First it can go back to that top again one more time because of the macro. After taking the top, then it can fall again. If it happens, I will frame the same setup again. But here I want to see that the macro will send the market lower, and then after 11 it will start to go higher again, or maybe it will go through this new opening gap, and then it will go for the sell side liquidity. If any of you would love to look for buy, please go for it. I'm not interested to look for buy as according to my knowledge, according to my understanding of these ICT concepts. So I'm not interested to look for buy. I'm only interested to look for sell. First thing, I want to see body close below this fair value gap. Just below that fair value gap. Any body close. That is going to be very helpful for me. If the body failed to close below this gap, it's really dangerous because market is respecting this gap perfectly, which is inside this order block, which is the bullish order block. So this body has closed below this gap. I don't want to see any body close above this gap anymore. It can go a little higher, but body should not close above this gap again, above this gap. But I can't move my stop loss right now until market close below this low, or maybe just go one tick below that low. I can't move my stop loss. This is just for your knowledge. This is just for your study. Don't take this entry. It's a low probable trade. Don't take it. I showed 2 entries yesterday. I'm showing you one more entry today so that you can study this for building your confidence. Okay, so please make sure that you didn't take this entry. You are just observing this trade. Do not take this trade. I keep repeating, do not take this trade. This is just for your what to say, I mean practice. This is just for your practice. Okay, don't take this entry. If you push your button, that means you disrespect me. By the way, if anyone was thinking the same way, maybe you are thinking the sell from this gap. Okay, that is different matter. But depending on my analysis, don't take this entry. It's a low probable trade. Don't take this trade. Just depending on my analysis. If you are taking your entry by your analysis, go for it, man. I have no problem with that. This is the model. You are not going to get it from ICT because this is my observation, my entry model. So please don't ask me why ICT talked about this. I won't be able to give you the proof. I repeat, don't take this entry. I don't want to see anybody close above that candle. Above that fair value gap. Nobody should close above that fair value gap now. Just not able to put my stop loss little lower because around 11 a.m. it can go little higher one more time. So I'm afraid of that, as it is inside the macro. So I'm afraid of that. So I'm not actually moving my stop loss. It should be over there. This should be the partial, at least here. That should be the partial. This will be my target here. That will be my target. Body should not close above this fair value gap. If it closes above this fair value gap, I'm in a great danger. Why is that? Because market, then I will see that market is respecting this entry fair value gap from 15-minute chart. It is respecting that and it is going higher again. Maybe for the next area it would love to look for. So I don't care. I don't want to see anybody close above that gap. Hey, Abdul Moti, you are here. Thanks, man, for using the link from the Tradify, man. Thank you so much, man. Thanks for your support. Look at the reaction from that line. This line is very, very, very important. That immediate rebalance 50%. It's very important. This time it has been violated this to trade the low of this gap. Accepted. This time it should respect it because market has done the upward job. Upward job has been done. So it should respect this line. If it doesn't, then it's okay. But if it close above this gap, then I'm in danger, great danger. Don't take this entry. It's a low probable trade. I think if you are unable to complete it before the time, then you have to pay the next month fees, challenge fee. You have to pay it. You are not going to lose it, but you have to pay the next fee, and they will provide you a reset. Okay, so you are not going to lose it. It can be little weird, to be honest. If this candle, when this candle has closed above this line, I'm in a little tension here. The support is market is inside the macro, so still I'm okay with that because it is inside the macro. So macro can do this type of weird thing. This is the weird thing. It can make the weird thing when market is inside the macro. Okay, I got a stop out over here. We'll keep looking for the run. If it come back again one more time below this fair value gap, that could be the same entry opportunity again from that same fair value gap, same way. Just because of the macro, it got stopped me out. I'll see this like that way. Again, please don't take this entry. I hope that nobody took that entry because this is low probable trade. So low probability, you don't need to take it. High probable, go for it. Low probability, don't go for it. It has closed below this fair value gap. One candle has closed. The very next candle come back again inside this fair value gap. That was the fake breakout. I have no way to understand this thing before it happens. So I have to accept that it has broken this fair value gap. I have to accept it. But sometimes if it doesn't work like that way, I can get stopped out over here. When it closes above this high, which is the market structure shift, it can tap any of this fair value gap, then keep going higher. For the next buy side liquidity level, as I don't have any buy side liquidity, I'm not interested to look for buy. I'll just let this go. No opportunity to take the buy. Immediate rebalance week is something. Let me show you. This is a week, okay? Big week. Then this body started to work until that area. Then another candle appeared here, trade until this week, until that week. So this is a bull body, but there is no gap. Let me show you. Okay. There is a sell week. Okay, there is a week. Let me remove all of the line. This is a sell week. There is a sell body. This candle open. There is no fair value gap left. This week 50% is immediate rebalance week 50%. This is a week. There is a body. Then this body open. There is a gap. I don't care about that week 50%. I have no interest to think about that week 50% because still it has made a gap over here. This is a week market trade until that area, come back again, closed here. This is a bull body. This candle open, trade until to the at least to the top of this week. No fair value gap is over there. This week 50% is important to me. This is a week, there is a body. This candle open, fully closed this area. So this candle trade until the open of that, until the close of that candle. I don't give a shit to that 50% of that week. I don't have to think about that. It has traded the full week. I don't need to think about that week 50% anymore. Okay, something like that. Let me check actually where did it come. This was that fair value gap over here. Is that clear, Outlander? Outlander, you can see the comment. I mean, the comment doesn't showed in the chat. Please read that comment and just tell me what I should do, brother. I mean, other people can't see it, but you can see it. Just tell me what should I do, man? What I talked about this area, how many times I started to talk, even when market was falling. What did I say over here? No need to. I will just tell me, man, what can I do? What else I can do? Here, when this trade appeared there, what did I say? When this candle, this fair value gap appeared, what did I say? This is the high probable trade opportunity. Highly probable trade opportunity. And when this setup I was outlining, what did I say over there? How many times did I say? How many times did I say? Don't take this entry, don't take this entry, don't take this entry. It's a low probable trade. How many times did I repeat that? What else I can do, man? Just tell me, brother. See, this is really so frustrating. Why I need to worry about this price action? Why I need to worry about this price action when there was a very nice price action over here? Why I care about that price action? I'm in live, so I have to talk about this price action. That's why I'm talking about this price action. Who thinks that this is a high probable area to trade? Seriously, man. If this market would love to keep going higher, I have nothing to do around this area. Just nothing. I have to let this go. It will keep going higher. Okay, I will let this go. I have nothing to do over here. If I had a bullish, buy side liquidity around this, for example, this is my buy side liquidity. Guys, try to understand. I don't have the buy side liquidity. If I had the buy side liquidity, do you really think that I would start to think about sell? Never ever. I would keep looking for buy. It came here, take that liquidity. I would see this is the market structure shift here. This is the last fair value gap, came to this last fair value gap. Any kind of buying opportunity, I would go for that buy until that buy side liquidity. Now this market will go higher. I have nothing to do over there because I don't know where is the end line. I never say that please go for this trade. It's a high probable trade. No, I didn't say that. Still, I believe that this market will fall. Still, I believe that it will fall. Is there any setup? Do you really think there is any setup? Until now, there is no setup. Still, I think that this market will fall. If it closes below this gap, then keep watching this setup one more time. How it is going to react. This is a low probability. It's not a high probable entry opportunity. Sometimes shit happens. That's why I told don't take this entry. It really breaks my heart, man. Who took this entry? Yeah. I have no buy side liquidity. I'm not interested to look for buy. If I had the buy side liquidity, I would go for that buy. Some of you are thinking that this market will come to this, new week opening gap. No, I'm not thinking like that way. At the beginning of this trade, I have already explained that. See this big expansion day. After a big expansion day, I don't want to see that market is going to take the previous day high or previous day low. I want to see it will work inside this candle. It is not going to take that high. It is not going to take that low. So it will do high, low, high, low, high, low. It will keep doing these things. That's my belief. After the big expansion day, it should be an inside candle. When it came here, I will look for any kind of selling opportunity. It will keep going higher. I have to let this go, brother, until it doesn't make a buy side liquidity. That means if this market come very near to that high, here, very near to that high, then it fall. I will never look for sell again. I will start to look for buy until this buy side liquidity is not taken. It has to come here first, make the buy side liquidity, then fall, then I will start to look for buy. Otherwise, I have no opportunity to look for buy. Is it really so difficult to understand, man? I don't think so. Don't you think that I can see this one after taking all of this liquidity, market structure shift, entry fair value gap, last fair value gap? Market will tap to this entry fair value gap. It will go for the next buy side liquidity. Don't I know about that? 100% I know about that. Do I have any buy side liquidity? No, I don't have the buy side liquidity. How can I look for the buy? Oh man. So I have to think about sell. Therefore, we'll see, brother. I want to see some kind of fall. Okay. If you ask me, I'm not interested to think about the buy anymore until it come to that high to make the relatively equal highs. If it do that, then I will start to look for buy again. If it fall a bit, I will start to look for buy. Until then, I will keep looking for sell at least until this fair value gap, which is from the 50-minute chart last fair value gap, around the new day opening gap, around this area, which is the new day opening gap. It's already gone actually from my chart. I think here, yeah, here, until that new day opening gap around this area. I will keep looking for sell. That it will come back again for that new day opening gap, at least until this area. Yeah, of course, this is the fake SMT. It can go higher, take that buy side liquidity before falling. It is also possible. There is nothing wrong. I'm just not interested to think about buy, as I don't have the buy side liquidity. Now you wanna look for the fake SMT as your buy side liquidity, which is you can see here. This high has taken over here, where this high failed to take here. Now it's not the fake SMT. You will understand that if you go to the daily chart. If you come to this daily chart, you will see that it's not fake SMT. Why? When market is going higher, E-mini S&P is the strongest. Nasdaq is the weakest. When market is going higher, when market is falling, E-mini Nasdaq is stronger. E-mini S&P is weaker. E-mini S&P has respected from this parallel gap. Perfectly has been respected over there. For Nasdaq, look, it came very near to that low. See, it came very near to that low. So here, when market is falling, E-mini S&P is the strongest. When market is going higher, sorry, when market is falling, Nasdaq is the strongest. When market is going higher, E-mini S&P is the strongest. Now I'm in 1 minute chart. From 1 minute chart, I will see this is the real S&P. This high didn't take over here. This high has taken over here. So I will see this is the strongest SMT, the best SMT over here around this area. This is the best SMT for selling because strongest sister has taken the liquidity, weakest sister failed to take that liquidity over here. Both of them will take that liquidity, then keep going higher. I'll let this go. I have nothing to do as I don't have the buy side liquidity. But for me, this is still the liquid, I mean SMT, perfect SMT over here. Here and here, perfect SMT to me. Down around lunch macro, a little bit of downside consolidation first. Yeah, it's a perfect consolidation, brother. Add new week opening gap from January 5th. Let me check. January 5th. They're important. Okay, don't ever think that this new week opening gap is not important. New day opening gap is not important. They're important. Yeah. Now it's on logical level. Maybe it will reach until this new week opening gap before falling. It is acceptable. It can happen. Okay, it can reach until this area obviously before falling. All I care about fall. I don't care about the like a like it will keep going high. I don't want to see that. You are looking for SMT, you got your SMT over here. This is the best SMT ever. Nasdaq failed to take that high, even S&P has taken that high. The best perfect SMT ever. Any kind of selling opportunity, I prefer look for sell. I'm not interested to look for buy. From this gap, I will look for the same opportunity I was looking here. I'll look for the same opportunity over there. Let me show that again. Let me show that. See this bullish gap, which is over here. This is that bullish gap. This is that bear gap. That is that bear gap. I want to see body doesn't close above the 50%. Body will close below this gap. The next gap is going to be my next selling opportunity. Depending on the same logic I was using over here. I would love to use the same logic over here. Now I have the SMT as well. Here you have the SMT. See this SMT. This high failed to take that high. This high has taken over here. Obviously, this market can reach until this new week opening gap before falling. It is acceptable as well. But I care about the fall only. I don't care about the buy. Whenever I will find the selling opportunity, I'll go for that sell. Is it really hard to understand? I don't think so. You want to take the buy? Go for it. I'm not interested. And why really do you bother, man? You had the best price action over here. What you are doing around this area? It was the best area. High probable trading opportunity over there. Why do you bother about trading right now? You missed your entry opportunity. It's your fault, not mine. Yeah, right now this is the 1 minute buy side liquidity. I mean, please don't make me confused because I don't want to add the SMT. I would love to work with this candle. I mean, Nasdaq only. So now I have the buy side liquidity from 1 minute chart. What else can happen? As Jack told me, this new week opening gap, it can take that buy side liquidity, trade that new week opening gap, then it can start to fall. It is also possible. Nothing is wrong over here for this type of situation because it has created the buy side liquidity. At the same time, you have to look for another thing. It has taken all the highs, failed to close above the week, that week 50%. It doesn't need to reach until this area. You have the hard time frame here. This is your hard time frame now. Why? Look at that week. Sorry, that week 50%. Body respected that week 50%. Took all the liquidity. The highest fair value gap. This is our first fair value gap entry. If you forget about this first fair value gap entry, it's your fault, not my fault. This is that first fair value gap entry to the top until the 50% of that week. That should be your stop loss entry from this first fair value gap, where you don't need any kind of market structure shift. You can take the entry from this area, from that first fair value gap, where market will take all the liquidity, fail to take the extreme high, respect the 50% of that week. You will start to look for selling opportunity. This body will close below this fair value gap. It will make another fair value gap around this area. That will be my another selling opportunity. Just the same setup I outlined over there. Same thing over there. But first, body has to close below this bullish gap. I will outline this. Please don't go for this trade. We'll just outline it. So if this body close below this fair value gap, the fair value gap it will create over here, that